People don't really understand this stuff. Once you understand this, it makes it much easier to understand how markets move, when they move, what they do. It's even easier when you know that we've got a predictable business cycle based on debt maturity. So if you've got that, you know what drives assets. Some lead, some lag. So crypto and technology lead. So probabilistically speaking, the business cycle lies ahead of us and it should be quite rapid. So when we start looking at forecasting models of the business cycle, here's the interest rate model that suggests to us.
Raoul's central point is elegantly simple. Bitcoin is a macro asset. Once you drop it into a macro framework, its behavior becomes understandable, not mystical. He argues that there are two overlapping forces driving Bitcoin's long-term path. First, a secular adoption trend, call it network growth or Metcalfe's law, that gives Bitcoin a steady upward drift over the long run. Second, a cyclical component, the business cycle. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
What people didn't really realize, and I think we pioneered the work on this, is Bitcoin is a very macro asset. It's very understandable and easy to understand once you put it in a macro framework. It's not magic internet money that just is uncorrelated to anything else. It's actually super correlated. So you get this mega trend, which is the secular adoption trend driven by Metcalfe's law in Bitcoin, and it goes up and down, which we all know. And on a log chart, it doesn't look scary. In the real world, it goes down a lot and then goes up even more. But when you detrend that, it's actually the business cycle. So it is just driven by the business cycle. The reason it doesn't look, you have to detrend it, is because Bitcoin has all of the price spikes to the upside. So the skewness to the upside changes that. But when you detrend it, you've got exactly it. And what the Bitcoin is pricing right now is a gap that is not normal. It's pricing a business cycle that's going to recession, and I'll show you that that's not the case. So we're getting into the zone where things get very interesting, where the alligator jaws start closing. But just to show the importance of the business cycle and why ISM matters, it matters for every asset class. Everything on a year-on-year basis is the business cycle. People don't really understand this stuff. Once you understand this, it makes it much easier to understand how markets move, when they move, what they do. It's even easier when you know that we've got a predictable business cycle based on debt maturity. So if you've got that, you know what drives assets. Some lead, some lag. So crypto and technology lead. They actually follow liquidity. Other things like small caps and cyclical stocks, well, they fit with this. So here's the Russell 2000, which is essentially small caps, basically the same. If we go forwards to crude oil, same. If we go through to industrial metals, the same. Everything. Literally everything in the entire investing world is driven by this cycle. Even things like the ETH Bitcoin cross. So think of this as alts. Alts are driven by the business cycle. So with the business cycle currently low, we haven't had alt season. And everyone's like, I can't believe they've robbed us of alt season. It's never going to happen. There's too many tokens. We can't have nice things and all of that bullshit we hear all day. It's not. It's just the economy's stupid, because what happens is, when earnings go up, when the business cycle is strong, you have more earnings and you invest those earnings further out the risk curve. It's just really basic stuff. It happens for exactly the same as small caps, exactly the same with junk bonds, credit. They all operate in exactly the same way, and the business cycle has been subdued. Listen to Scott Bessent. He's telling you all day, as is Trump, is we're going to have a banner year next year. Why? Because they're going to jam the market with liquidity, and they're going to jam fiscal stimulus through as well. Yeah, if you think about it, the US is a service-based economy. They're going to get rid of tax on tips. That's a huge boost to people. There's like $1.5 trillion that will flow into the banking system just from that stuff alone, from the big, beautiful bill. Then we've got the changes to the SLR that allows maybe $3 or $4 trillion of credit creation from the banking system. We've got enormous amounts of this stuff lining up. Why? Because they want to win the election. You know, the good thing is, for once, we've actually got a macro hedge fund manager running the treasury. So I know how he thinks. He was a long-term global macro investor subscriber. I've known him for 20 years, and he understands the game. which is jam the business cycle going into the elections. So we've got that. We've got the debt to roll. It's kind of stacking up, and it tells you your beloved or our beloved alt season is still to come. Bitcoin dominance, the same thing. It's driven by the same thing. It's much like when the economy's slow, people tend to be in treasuries. When the economy picks up, they go further out the risk curve in different types of credit. It's all the same cycle. So it's a very macro asset. And here's the chart of the ISM versus Bitcoin, and you can see the peaks and troughs correlate well. So are we at a top, which is the thing that people bleat on all day on Twitter, with the top of the cycle? We can't be, because we're not topping in the ISM. In fact, we've not even gone above 50 yet, so we've not had economic expansion. Main Street has been struggling. They need rates to come lower. They need fiscal stimulus, and that's all to come. So probabilistically speaking, the business cycle lies ahead of us, and it should be quite rapid. So when we start looking at forecasting models of the business cycle, here's the interest rate model. That suggests to us that the economy strengthens fast and quite dramatically in the next 6 to 9 months. So that's good for altcoin season. That's good for crypto. That's good for all risk assets. Another way of looking at it is central banks. The number of them who are easing, that leads the business cycle, obviously, because they're cutting interest rates. So that tells us we've got a strong cycle still ahead of us. The one for us that matters the most is our financial conditions index. That's driven by rates, the dollar, and commodity prices. And this chart has been very, very useful in predicting where everything goes. And it tells us in 9 months' time, the ISM should be at 57. And we don't think the financial conditions index is done yet. Another leg lower in the dollar, another leg lower in rates, and what we get is an extension of the cycle out further than 9 months.
He layers in the dollar story too. A weaker dollar is a multiplier for financial conditions. If the dollar takes another leg down, he compares current dynamics to the prior cycle. That loosening of conditions would feed liquidity, push rates lower, and extend the cycle, potentially out to the end of 2026. Global M2 and other broad monetary aggregates display the same chop then accelerate pattern we've seen in prior cycles, suggesting the more stimulative leg is still to come.
This is a very good indicator. But we can add to this by thinking about liquidity in Bitcoin. Why does all this matter? Well, because the correlation of the two things, of total liquidity and Bitcoin, are extremely high. In fact, the correlation is 90%. Statistically, that is absurdly highly correlated. When you look at the NASDAQ, it is even more absurdly highly correlated. It's 97.5% correlated with money printing. So money printing is the story that drives this, and then network adoption is what drives the outperformance. So if you think about the hurdle rate being 8%, everything above that is driven by network adoption of the technology. Liquidity, where are we now? Well, year-on-year liquidity is not very impressive. This kind of slow grind higher has been what we've lived through in crypto from the bottom. It's kind of stop-start. Things don't really get going. Some things get a narrative traction, then fall off again. It's because liquidity is not flowing through the system. We've had broken plumbing, and we've had no need to do it yet because we don't have to roll the debt until 2026. When we look at financial conditions, our lead indicator, and put them against total liquidity, well, we've now got a lead, a 3-month lead, and it tells us liquidity is about to explode. And we know that because Scott Bessent's telling us that. They're telling us they're going to add liquidity to the system. We know that because they have to, because the plumbing in the financial markets is breaking as well. So we've got that to come. And then when we overlay ISM, we've got this perfect dominoes of the economy. We've got a high lead indicator, financial conditions, leads by 9 months. Then we've got total liquidity, where Bitcoin and NASDAQ live. And then we've got the ISM, where oil and commodities and cyclical things all live in. So we can understand how the market works over time and asset allocate accordingly. The other thing is, part of that financial conditions is the dollar. Here's the dollar last time Trump was in versus this time. It's scarily the same. It would suggest that we probably have another leg lower in the dollar, which would give us another leg in financial conditions, which means that the cycle extends to the end of 2026, which is why I keep saying it's a longer cycle than people expect. Global M2 is doing roughly the same thing. We had that chop periods last time around with Trump, and again, we get the accelerated part as we go. So that feels like that's coming as well. But we've had a weird world in crypto in the last 5 months, 4 months, is where we've diverged from everybody and we feel now we can't have nice things. It's all over. Everybody hates us. It's a terrible world out there. And it's because of stuff like the Global M2 chart. That was a chart I was showing for a long time. I said, listen, it's not going to be perfect. And then it started diverging wildly. What happened here was because of the lack of liquidity in the system, the Treasury began to increase its general account. There was no offset with a reverse repo, and crypto being the furthest asset out on the risk curve got hit. NASDAQ didn't get hit because everybody was underweight NASDAQ going into the last quarter of the year, but crypto got hit. And liquidity is still problematic, which is why the Fed started using the balance sheet again. And that's why we've struggled. It's not been easy because there's not been enough liquidity around in the system. Global M2 against NASDAQ's worked fine. And the reason being, again, is because asset allocators were underweight NASDAQ. It had been a good performer all year, and they've had to chase their benchmarks. So we've seen this kind of stuff. Even though we've had kind of fear and greed in technology stocks extremely on the fear side, people have had to chase the market. They didn't do it in crypto because they're not benchmarked against it. But it's still working. But NASDAQ against Bitcoin hasn't. This alligator jaw has opened up. And the alligator jaws, I think, will close because of when liquidity comes in, crypto is the most liquidity sensitive. Against gold, gold actually leads by 183 days. Gold lives in financial conditions world. And again, we've diverged from the gold chart. Same thing, the alligator jaws, same thing, driven by the same issue, which is there's not enough liquidity in the system to flow all the way out to crypto, and we're all stuck there watching the market flapping around while other people are having a party. And it's slightly irritating, but it is what it is, and patience is the game. We're playing a macro game here. We're not playing, hourly charts. We're playing a game of cycles. We're playing a 5-year cycle, not a 4-year cycle. These things take time, and patience is the important thing if you want to capture the returns. Bitcoin against the 2015-17 cycle has been mapping really well. Alligator jaws, again, same reason. Bitcoin against 2021, alligator jaws, same reason. So we've got this consistency across all of the things to show we've had a dislocation. And the question we ask ourselves as investors is this dislocation persistent or temporary? And from the work that I've done and showed you, it's most likely to be temporary. If not, then suddenly the 90% correlation to global liquidity is gone for no apparent reason. And that doesn't normally happen. Another alligator jaws against a different period. Just all of these things. We see it even with the economic surprises index. We get this excess fear gap that's happened in Bitcoin. If you remember, Bitcoin is pricing in an ISM of 46, which is a recession. Yes, we'll have slow growth from the government shutdown and other stuff. We're highly unlikely to have a recession because all the forward-looking indicators suggest the business cycle is going to get a lot stronger. So we've become pessimistic after the washout in October that it's never going to come back. And I think generally that's going to wrong foot people because of the macro work that we do. Financial conditions, same thing, excess fear gap or alligator jaws. We saw that with the fear and greed index getting down to 10. It was the lowest reading in the history of crypto. And that was after a 30% sell-off. And I keep saying with my don't fuck this up thesis, 30% sell-offs are normal. But yet we just cowered in fear when it happened. It's like, really, guys? We've seen this before. Sorry, just go back to this chart.
He also addresses the human behavioral side. Fear and greed extremes in crypto are amplified during dislocations. The recent washout produced a fear and greed reading near historic lows. People extrapolated the low forward and assumed alt season is dead. But when you look at the plumbing and forward-looking indicators, that pessimism is likely to be wrong-footed. In other words, despair can be an entry signal when the macro model says liquidity and earnings are about to improve. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.